Hi guys, this is Mr. Choke. If you're watching this, you're definitely at the right place. Please don't forget to subscribe to our YouTube channel by clicking that subscribe button down there. And I promise you that will make your academic problems of accounting a thing of the past. With that out of the way, let's get into the lesson of the day. Now, in this morning's lesson, we're going to be looking at the task collection schedule. Before we do anything, we firstly need to understand basic concepts. Okay, you must have a good understanding of the theory. But in this lesson, I'll not get into theory because this is something that I believe that you and your teacher would have done by the time you watch this lesson. But what is very important for this lesson is for us to understand now, what are we talking about when we talk about the data? When we talk about the data, we are talking about somebody who has bought from the business on credit with a hope, with the intention of paying at a later stage. So in other words, it means that we sold to these people on credit. Okay, so remember a debtor, this person bought from you and on credit, and they're going to pay you later on. Now, what we do every month is that we have to prepare a collection schedule for our debtors so that we can know how our debtors are going to pay us, so that we can know how we are going to collect money from our debtors. Okay, and then obviously, in order for you to do that, you need to be given a specific budgeted period so that you can know how are you how many months are you preparing the collection for. Okay, now here they're saying make use of the information provided below to draw up the data's collection period for 3 months, which is from January up until the 31st of March 2021. And then they've given you actual sales and budgeted sales. So now, normally learners get confused and ask themselves, why am I given actual sales and budgeted sales? Now, in terms of this, when it comes to your actual sales, you will normally use them when you refer to the first few months, and then after you are done using this sales that they've given you, then that's when you will use the budgeted figure for the months that are still coming. Okay, so actual sales, you will only use them for the months that were outside our budgeted period. For example, if the credit sales took place in November, they won't give me budgeted sales, they will give me actual sales. So you need to know when to use them. Okay, so now here they're saying uh, debtors usually settle their accounts as follows. So, in other words, this is the policy that they use to collect debt from debtors. They're saying that 60% of the debtors they pay 1 month after the date of sale. So, in other words, 60% of the debtors are going to pay in the first month after the transaction has taken place. Next, they're saying that 20% of the debtors they pay 2 months after the date of sale. So, in other words, 20% of the debtors will pay in the second month, and then next 15% of debtors they pay 3 months after the date of sale. So in other words, that 15% will pay in the third month, and then the fifth percent, the fourth thing that we need to know is that 5% of bad debts will be written off, and then this will not be done in the third month, but it will be done in the next month, which will be our fourth month. Example, if somebody purchased in November, we need to know when are we going to write them off. Remember, if I bought in November, my first month will be December, and then my second month will be January, and then my third month will be February, and then the fourth month where you write off it's going to be March. So you need to know when the collection the written off will also be done. There are some questions that I've seen where they also ask learners to calculate the amount of bad debts that will be written off, so you need to keep that in mind. Okay, so let's continue with our lesson. So they're saying that note that cash sales is 40% of total sold sales. So obviously, if cash is 40, it means our credit is going to be 100 minus 40, which will give us 60%. So our credit sales in this case will be 60%. Okay, so when we do our calculation, we need to remember that. So we are going to do that together. So they've started by giving us information from November. So when you do this, guys, you need to think about time in mind. Remember, your budgeted period is for January, February. It's from January up until March, but your collection will start from some months back, and then you need to check if those months will affect your current collection period. Okay, so let's check how this information was presented in our answer book. So in our answer book, they expect us to show how we are going to collect. So let's check. I'm going to show you how to present this so that we can know exactly what to write. So remember, if we are looking at our month, we are going to start with the month of November. I remember I said in terms of November, it shows us that for November, the first month will be December, right? And then the second month will be January. So if you check, remember in the second month they collect 20%, and then if you check in your answer book, they collected that 20%, right? So what you do um for you able to get this right, credit sales has already been collected for you. So you need to identify the month that you need to identify here. And for me personally, I write that this is month one. This is okay. This is from the credit sales of November, and then they showed us that 20% will be collected in January, right? For this budgeted period, they will only collect 20%. Remember, the policy told you that 20% is in the second month, so it means here the next part I'm going to focus on 15%, which is the third month. Okay, so on the third month, I'm going to focus on 15%. So it will be 36,000 times 15 divided by 100. But remember, as we indicated on our information, the third month will be in February, right? So if you say so remember, this will be in February. This will be in February. So it tells me that here I'm going to put nothing for that 15%. Okay. So now if we say 36,000, if we say 36,000 times 15 divided by 100, it's giving us 5,400. So it means 5,400 will be collected in February. But we know that in March, remember this 15% is for it is for the fifth month. So fourth month they can collect. So it means in March, from the sales of November, they will collect nothing. Okay. Then after this, we move to the month of December. Now we need to get the credit sales for December. How much was our credit sales? So remember, to get your credit sales, what they did here, what they did to get the credit sales, they said they took that. Let me show you how they got the credit sales for November 1st. So they said 60,000, 60,000, and then they said multiply by 0.6 60, which gave them 36%. That's how they got the credit sales. Okay, now let's get our credit sales for the month of December. So for December, to get our credit sales, we're going to say 80,000 multiply by 0.60 by 60%, which gives us 48,000. So it means that our credit sales for here for the month of December, it's 48,000, right? Now, here's what we need to know. We know that when it comes to December, we need to check the first month after December. It's January, right? After December, the first month it's Jan, right? So first month after December, it's January. So it means here what you will do for January, I mean sorry, for the December sales, you will collect in January. And then we know that the policy says that in the first month uh they collect 60%. So it means we're going to say here we will say we'll multiply this by 60 divide by 100, right? And then we know that the month it's in the month it's for January. So remember, this is for the first month. I will indicate that it is for the first month, right? So and then next I check the policy. So let's calculate quickly. So if you say 48,000, and then you say multiply by 0. 0.60 is going to give you 28,800. Remember, you are putting it here, 28,800. Now next we are going to go to the second month. So we say 48,000 multiplied by, remember, the next month the policy says that it's 20%, so we're going to multiply it by 20 divided by 100, and then this will be in the month of February, and then it will be the second month. Okay, so if we say 48,000 multiplied by uh, 0.20 is going to give us 9,600. Remember, we're looking for a 20%, so it's 9.6. So that 9.6 can be in January, so it will be sorry, I wrote here by mistake. So I'm going to erase here. So remember, that answer that we got, that it means here actually it will be 0 because we are not doing any collection. So here we'll put our 0 here, and then remember we're collecting in February, so in our February we will put that 9,600 9,000 9,600 here. Okay, and then next we'll say 48,000 multiplied by, remember in the third month they said it's 15%, so we'll take 48,000 multiplied by 15 divided by 100, and this will be in the month of March, and this is the third month. Okay, so here nothing, and then in the month of March is going to be let's say 48,000 48,000 uh 48,000 okay, 48,000 multiplied by 0.15, it is giving us 7.2. So it means that 7.2 will come to March here. Okay, very important for us to remember that. Now in the fourth month they are going to write off, so it means that we will need to change. So I'm gonna try to use probably a different color so that our work doesn't become untidy, né? So the next month that we have, it's January. So we know that in January, what we need to firstly calculate, we know that for January, our credit sales here will have nothing. So what we can do, because January, the first month after January is going to be February, so we can start by collecting in February. Okay, so let's get our credit sales first. Now, according to information, to our information, our credit sales in January it's 50,000. So if you say 50,000 multiplied by 60% is going to be 30,000. So our credit sales for here it's 30,000. Okay, so that 30,000 will come here. So we know that in January we can collect in January, right? So we'll collect in February. So here we'll collect 60%, and this is, remember, this is in the first month, right? So we, and then this will be collected, the collection will be done where in February. So you need to know that. Okay, so I'm gonna erase this here and put a note somewhere. So remember, this collection will be done in February, and this is our first month here, right? So if we say 30,000 multiplied by 0.60 is going to give us 18,000, and then from there we know that we are going to collect in the second month. They said in the second month we collect 20%. So it means we're going to say that 30,000 multiplied by let me remember the percentage. It's 20 over 100 multiplied by 20 over 100, and then we know that this is in the let me go back there. We know that this is in the month of okay, so we know what's happening here. We know that our information, this 20% should be collected in the month of March, which will be the second month, right? So we will collect it in March, okay? And then this will be the second month. So it tells you already that here nothing, nothing, and then in March you'll have the amount. So if we say 30,000 multiplied by 20%, it's going to be 6,000. So that 6,000 will come here, okay? And then the next part, we need to check if the third month is outside, so we can use it. So we'll move to the next month, which is February. So for February, we need to know what is our we need to know for February. We know that we need to get our credit purchases for February. So let's quickly check that. Credit purchases for February, it's 52,000, right? So if we say 52,000, remember our credit sales is 60%. So if we say 52,000 multiplied by 60%, it gives us 31,200. So we need to have that 31,200 here. So remember here, we can't do any collection in January, we can't do any collection in February. So what we need to do is to just collect for the first month, which is 60%. So that 60% in February will be collected for credits of February will be collected in March, which is the first month. Okay, so let's check. 31,200 multiplied by 60 divided by 100. It gives us 18,720. Then after this, what we need to do is to add all our totals. So we're going to start with, I'm trying to move this calculator. Okay. Okay, it doesn't want to be moved, so I'll say 28 7.2 7,200, and then I'll add it together with 28,800 and say plus 28,800. It gives us 36,000. So for the first month, we will have 36,000, and then for the second month we'll have 5.4 plus 9.6 9.6, and then we'll also say plus 18,000. So it gives us 33,000. So that 33,000 will come here. And then for March we will have that's how much, 7.2. We'll have 7.2 plus 6,000, and then also plus 18,720, which gives us 31,920. So this is when you go to your cash budget. When you go to your cash budget, under receipts. Remember your cash budget, it will be January, February, and then it will be March, right? So this is how it will be. Your collection from debtors is going to be 36,000. You move to 33,000, and then you would have 31,920. So this is how, guys, you'll be expected to show it in the cash budget. Okay. Thank you so much, guys, for watching. If you want me to become your online tutor, you're more than welcome to get in touch with us by using the details that are available in the description of this video. And remember that our lesson are available from just 500 per month for online. Okay. Thank you so much, guys. God bless you. Shalom.